Greetings, good people. We meet once again with an aim of finishing capital as a production factor. Last time we look at capital, but we look at part one. I said it's part one of it, whereby we're focusing on the types of capital with their examples. We also look at the methods of creating capital, sources of capital, and we also moved on to look at assets and credits. We close it by looking at the problems that are associated with capital. What we will do in this presentation that we have, we will finish capital by looking at the financial management systems, focusing on the financial documents that are used in farm business. This is what we will focus on here. We have to look at reasons of keeping financial records. If you decide to keep financial records, there will be reasons for doing that. We have to look at it. We have to also be able to identify the different financial management systems by looking at the financial records that we will check, the farm assets records, and the farm budgets. That's what we will check. We have to also look at the different types of budgets. We have 3 types of budgets. So that's what we will check. We will look at the different types of budgets and try to come up with examples in each and every type of budget that we have. We have to also talk about the cash flow statement. When we talk about the cash flow statement, we will focus on the principles or the components of what the main components of cash flow statements, and we will try to look at the whole cash flow and how can we expect questions from the cash flow statement. We will then look at some income statement and check how can we analyze income statement, how can we analyze a balance sheet. So with this presentation, there are 4 things that we will focus on. We will focus on financial documents, which are 4. It will be a budget, balance sheet, cash flow statement, and income statement. Those are the 4 documents that we'll focus on, good people. Let's start with the first thing. Why a farmer decides to keep financial records. The first thing, it helps the farmer to manage capital. It helps the farmer to be able to manage capital. It also assists the farmer to draw up a budget, to be able, how much is he expected to spend and how much is he expected to gain from that business. So it assists the farmer to draw up a budget. It also assists a farmer to plan for the future of the enterprise, to know whether the enterprise or the business will make profit or not. So that's how we say it helps the farmer to plan for the future enterprise. It also assists in planning, in also to analyze the future performance of the enterprise, to know whether in the near future will I have profit or not. You will only realize that if you keep the financial records. It also assists in applying loans. It provides information for tax purposes. It is also used to provide proof of payment. It monitors the inflow and the outflow of money, which is the movement of money in and out of the business. So that's what we focus on. That's what you must analyze. But if you can master at least 3 of them, you will be safe in the exam. Let's look at this one, good people. Let's look at a budget. Make sure that you focus here. Let's look at a budget. When we look at a budget, we say a budget, we define it as a document. This document, it provides an estimate of expected income and expenditure for a given time period. So this is the document that will provide how much is the farmer expected to spend or is expecting to spend and is expecting to gain in that given period. That's how we define it. In some cases, good people, you will find that they say it assists the farmer to provide an estimate, or maybe they say of future income and expenditures over a given period. So what you may come across, it's an exam type question, this one. What you may come across in the exam, they can give you a budget. They tell you that this is an item, they say income, expenditure. They provide you the item and their rents, item and their rents. And then they say, at the top of that statement, of that budget, or of that financial document, they say, this is a document that a farmer used to show the future income and expenditure of a given period. So once you see a term that says future income, or they say estimate of expenditure and income, or as they say expected income and expenditure, you must know that they are talking about what? About a budget. You will get this one especially in section A, where they give you this term. Then it's very crucial to know that we have different types of budgets, good people. We have 3 of them. We have a budget that we call enterprise budget. We have another one that we call whole farm budget. We also have the third one, which we call partial budget. It's very important for you to know how we define these 3 types of budgets. Let us have a look at them. We have the first one. When we talk about an enterprise budget, good people, we say this one refers to the expected income and expenditure of a single or of one production unit in the farming business. We say it shows the expected income and the expected expenditure of a single production unit. So it's a budget that shows a single or one production unit or one farming unit. We also have the next one, which is whole farm budget. When we look at a whole farm budget, we say this is a document or a budget that shows the expected income and expected expenditure for all the different farming enterprises, or for all the different production units in a farming business. Let's try to understand this one, good people. We are saying enterprise, it shows single production unit. Whole farm budget, it covers all the budgets for the different farming enterprises or farming production units. Let's say, good people, this is our farm. In this farm that we have, let us agree that maybe here we have vegetable production. Maybe here it's fodder production. We produce fodder and sell it. Let us agree that maybe here it's poultry production. Then here, let's say it's cattle production. These are production units. Vegetable production units on its own. Fodder production unit on its own. Poultry production unit on its own. Cattle production unit on its own. So it means we have 4 production units. If a farmer, good people, decides to make a budget of vegetable only, it means he's focusing on only one single production unit. We will say that is what? That is an enterprise budget, because it's a budget that focuses on a single production unit. If again he decides to make a budget only for cattle, so he's focusing on only one production unit, we will say it's enterprise. But if he makes a budget that covers all the production units, vegetable, fodder, poultry, and cattle, so it means now this is a budget that covers all the different farming enterprises or farming units in a farm. So we will say it's whole farm budget. So that's how I want you to understand it. Enterprise budget, we focus on only one production unit. Whole farm budget, it covers all the production units in a farm. That's the simplest way I can try to explain this one for you. Then we have this third one, good people. Partial budget. A partial budget, good people, we say this is a budget that is used to investigate the effect on profitability. It investigates the effect on profitability if you make a change to your farm operations. It assists the farmer to check whether he will make a profit or not if he decides to change the farming or the farm operations. Okay, let us say the farmer was having a farm. There is misproduction. He decides to, when he harvests, he used a harvesting machine, a combine harvester. When he used a harvesting machine, he said, "Eish, the machine is expensive. I spend a lot when I use the machine. What if I employ people who will do the harvesting?" And then he makes a budget whereby he come up with expenditures for using a harvesting machine and income. He also come up with a budget where he come up with expenditures where he employs people who will do the harvesting using hands. Once he makes that budget, then he says, okay, fine. If I change from using a machine to using employees or to using people, I will make a profit. Then he can take that budget. But the main thing that you must understand when you talk about a partial budget is that in a partial budget, it is a budget that is used to investigate what the profitability, if ever a farm changes farming operations. You change from this operation to another operation. Will I make a profit or not? That's when the partial budget will apply. Okay, fine. So make sure that you are able to see that one. So sometimes in this case, an exam type question. Again here, they can give you a budget. Then they will say, which type of budget is this one? So you must check whether it covers all the enterprises in a farm. If it covers all the enterprises, it's a whole farm. But if it focuses on only one production unit, it means it's an enterprise budget. That's the simplest way to understand this one. Now, good people, we are getting to a type where you can come across a question. They can, in an exam, they can give you a question based on budget. When they give you a question based on budget, they will give you a list of items. Take note of this part. They will give you a list of items. When they give you a list of items, they will then expect you to draw a budget using that list of items. Let us see how you can attack this question. They can give you electricity, sales to the local market, labor, water, savings, sales to the hostels, and loan. What they've done here, they've given you the items and their rents. Then they will request you to draw a budget. A budget, we said, it shows or it provides the expected income and expenditures. Which means the first thing that we can do here, we must start by categorizing whether each of these items falls under income or under expenditures. Then we can say, okay, fine, electricity, is it money that is coming into the business whereby we say it's income, or it goes out of the business whereby we say it's expenditure? We have this one, electricity. Then maybe in your question paper you can highlight, okay, fine, this is an expenditure. They paid electricity rates. Sales to the local market. They went to the local market, they sold some of their products and they received money. So we can say, good people, it's what? It's income. Labor. They had to pay their employees. Expenditure. Water. They paid water rates, water bill. Expenses. They bought seedlings. Expense. Sales to hostels. They went to the hostels and sold and to sell their products. We can say it's what? It's income. Loan. So they took a loan for a tractor with 205,000. So it means it's what? It's expenditure. Once you do it like this, then you draw up your budget. When you draw up your budget, good people, it will be just a rough one. Okay, fine. Let's say here you say income. It's up to you whether you start with income or expenditure. Income. Here you have expenses. Item, rents. Item, rents. Then you list the items for income. Sales to the local market, 200,000. Sales to hostels, 120,000. Then here, good people, you come up with a total for the income. You write your total. Clear on that one? Again, you say expenditures. Other expenditures. We have electricity. You put the rents. Labor, you put the rents. Water, you put the rents. Seedlings, you put the rents. Loan, you put the rents. Then you say total. I hope I'm clear, people. You say total, you add. When you say total, you add the rents, you put the total. You add the rents, the rents, you put the total. Then here, good people, you have to then show whether the farmer will make a profit or not. Profit or loss. Then you have to calculate profit or loss. A formula to calculate profit or loss. Let me try to put it here. When you calculate profit or loss, we have to say the total income minus total expenditures or expenses. Expenditure. Then you say, let's say you calculated the total for income here, you put it here, minus for expenditure, you put it here. You punch your calculator, you get an answer. Then you come and write your answer here. You can even put in brackets. If it's an income, if it's a profit, you say in brackets profit. If it's a loss, you say in brackets loss. It will be a profit if the income is more than the expenses. It will be a loss if the expenses are more than the income. But when you punch your calculator using this formula, if it comes with a negative sign, it means it's a loss. But if it comes with a positive sign, it means it's a profit. That's how we have to do it, good people. Let's try to check it here. Oh, we also have pesticide. Let's try to check it here. This is what we have. Expenditure income, item rent, item rent. Then you list all the expenditure. You list all the income. You put the rents, you put the rents. Then you say total. See our total for expenditure, 252,500. Income, 320,000. Then you come up with your formula. What is the formula for calculating profit or loss? We say, let me try to put it here. Profit or loss. We say income minus expenses. Then you take the income, you put it here. You take the expenses, you put it here. We get this one. Look here, we said profit because the answer came as a positive. While I'm still here, good people. So that's how we expect you to draw the graph. While I'm still here, good people. Remember we said this is a plan. It shows the future income, the future expenses. Remember the farmer is making a budget. A question may come whereby they say, would you advise the farmer to continue with the budget or not to continue with the budget? If we got an answer when we calculate profit or loss, if we got an answer that is positive, which shows that it's a profit, it means the farmer will get what? Will get a profit. So we will then say the farmer can continue with the budget. A question will come. Motivate your answer. You will say the farmer will make a profit. You can even say the profit. The farmer will make a profit of 67,500. Or you can say the income is more than the expenditure, depending how you want to put it. So you will get this question. When you get this question, can he continue or not continue? Look at the profit or loss. If he gets a profit, continue. If he gets a loss, you will advise the farmer not to continue. Why? The farmer will get what? A loss. That's the simplest part of it. Okay, fine. Allow me to quickly move on to the next one. Remember we said there are 4 financial documents. Budget. From budget, we look at balance sheet now. When we look at a balance sheet, good people, we say a balance sheet. This one is a document that summarizes. It's a financial statement or a document that summarizes assets and liabilities. It summarizes assets and liabilities. Last time we looked at assets. When we're looking at assets, we say assets, these are things that the farmer owns and they have a financial value. Liability, we say things that the farmer owes. So assets, it's what belongs to him. Liability, it does not belong to him. He owes it. He's supposed to pay for it. Asset, it belongs to him, is the value of money he is having. Liability, it's what he's supposed to pay. Okay. Then we have these definitions here. We have these definitions here. In a balance sheet, you will be expected to calculate a net worth, because a balance sheet, it determines the net worth of a firm. You will be expected to calculate a net worth. When we calculate a net worth, we say net worth is the difference between the value of assets and the value of liabilities. Is the difference between the value of assets and the value of liabilities. Here's the formula that we can use. Net worth is equal to assets minus what? Liabilities. So what I want you to note, once you see that this financial document, it talks about assets and liabilities, it means it's a balance sheet. Once you see that the financial document talks about expected income, expected expenditure, it's a budget. Again, here in the balance sheet, you may be required to draw up a balance sheet using the information that you'll be given. Let's check it. Example of a balance sheet. You'll be given items again. Value of a farm, tractor loan, value of vehicles, overdraft, bond, cash, value of buildings. Value of building. Again here, we must start by categorizing each item, whether it falls under assets or it falls under liability. Let's try to check it, good people. The value of farm, it's what his own farm values, the money that it values. So we can say this one, it belongs to him. It's an asset. He took a loan to buy a tractor, so it means he's paying the loan. So we can say it's a liability. Value of vehicles. You have his vehicles. What is the value of these cars if he can decide to sell them? What is the value of these vehicles if we decide to sell them? So it means that money belongs to him. We say it assets. Overdraft. Overdraft, in a simpler way, we can say it's a negative balance that is created in a bank because you have withdrawn more than what you have. So it means it's money that you are owing and you have to pay it. So we can categorize it as what? As a liability. A bond is having maybe the farm or what, but it's a bond. So it means this 4,200,000, it's money that is supposed to pay. Maybe in his safe there is cash of 50,000. That is that money belongs to him. We can say it's what? Assets. Cash of building. If he decides to sell that building, he will get what? 650,000. It's money that can belong to him. So we say assets. So that's the first thing that you do. So once you have done that, then you come and draw your balance sheet. Almost the same with the one that we did. Assets, liability. Item rents. Item rents. Then you say assets, value of the building, value of vehicles, cash, value of what? Of the farm. Liability, tractor loan, overdraft, bond. You come up with a total. You come up with a total. You add all of this. You add all of this. You put the totals here. Then you have to calculate the net worth. Remember, net worth, we say net worth is equal to assets minus liability. I'm just making some shortcuts, but when you write it in full in an exam. Assets minus liabilities. Then you say assets, total of liabilities. You write it here. We will see whether I get a deficit or what. Okay, that's the simplest way of doing it. Let's try to look at it here. Then this is what we have. Asset, liability, item. We list all the items that falls under asset, all the items that falls under liability. We come up with the total. Net worth, we write the formula first. You write the formula. After writing the formula, when you calculate, you substitute, you punch your calculator, you get you get the answer. But what you must notice is that in this case, the farmer will get a deficit. So it means the next month that he will start, or the next month it means he will start that month in a negative balance. So maybe he has to get a loan or what, but depending how the farmer decides to solve that problem. So that's what you can expect ku balance sheet. Budget, define, you throw the budget. Balance sheet, define, throw the balance sheet, be able to calculate net worth. Cash flow statement. It's simple with this one. We'll just look at two of them. Cash flow statement, it shows the movement of money through a business, or one can say it shows the inflow and outflow of money in a business. So it shows the movement of money in and out of the business. But in a cash flow statement, we also have components that we have to check. One, you will get income there, expenditure, profit or loss, opening balance. And opening balance is the only one that will get cash flow. You don't get it to balance sheet, you don't get it in a budget. We also have closing balance, then cash items. So we look at the inflow and outflow of money. Hence we say cash flow. It's whether the money is getting into the business or getting out of the business. Okay. Let's look at it, good people. Here there's nothing much to look at. But what I want you to understand, there are two things that I want you to understand is that when you look at the cash flow, they say the closing balance of this month that we are at now will be the opening balance of the following month. The closing balance of this month will be the opening balance of next month. Let's look at it. The closing balance of month 1. The closing balance of month 1 was 26,000 minus 26,600. If you look at the closing balance here. The opening balance of month number 2 is the very same amount, negative 26,600. Hence we say the closing balance of this month is an opening balance of the next month. What is the closing balance of month 2? 212,400. What is the opening balance of next month? Month number 3, 212,400. So it means if you close this month that we're in with 10,000, you will get into the next month with the very same 10,000. Hence say the amount you have closed your books with is the amount that you will start your farm business with in the next month. That's the simplest way to understand it. That's it. Income statement. Let me try to be quick. Income statement. We say income statement is a financial statement that summarizes all income and expenditure for a given period. Under income statement, you will be expected to calculate net income. When you calculate net income, you say the total income minus the total expenditure. It's almost the same, it's the same exactly with the profit or loss. You just say total income minus total expenditure, then you calculate it. But make sure that you start by adding all the income, you add all the expenditures. You do that in your answer book, in your answer sheet, because sometimes there is a mark for that. You don't do it in your question paper only. You do it in your answer book, you show it, and then you write the total, you write the formula, you write the total for income, total for expenditure. Then you punch your calculator, you get a mark. So that's the simplest about the cash flow, about the income statement. Then here's the formula. Then there are these terms that I want you to note as I'm about to close. Interest, we say amount of money that a bank or financing company charges for lending capital. Assets, we have highlighted this one. Liability, we have highlighted this one. Inventory, we say records of assets. Net worth, we highlighted it as the difference between the value of assets and the value of liabilities. Then we have these two types of cost. We have fixed cost and variable cost. Fixed cost, these are the costs that do not change or do not vary with the level of production. But when we look at variable cost, we say these are costs that changes or that vary with the level of what? Of production. Then we have overheads, whereby we look at general expenses. General expenses. So we make sure that you master these terms. Let me look at this one with you, good people. Let me look at interest calculations. I had to highlight this one because we have noticed that in some cases they ask you that how much interest will the farmer pay back, or how much loan will the farmer pay back. So I had to highlight it before I close the whole the whole presentation. Let's say they give you this statement. They say a farmer borrowed a loan of 350,000 with an interest rate of 12% per annum at a financial institution. He has decided to borrow 350,000. What is the interest rate? The interest rate is 12%. The question now comes, and the question says, calculate what? The interest the farmer will have to pay to the financial institution. When they say calculate the interest the farmer will have to pay in that year in the financial institution, you will say the percent of the interest. Listen, the percent of the interest divided by 100 multiplied by the amount of money he has borrowed. What is the percent? 12%. Divide by 100. Multiply by the loan. How much? 350,000. You will get the interest. Let's check it. 12 divided by 100, multiply by 350. We get what? 42,000. We get 42,000. Okay. We get 42,000. Again, good people, you see here they said, let us calculate only the loan. They may say, calculate the amount the farmer will pay to the bank or to the financial institution after a year. Calculate the amount of money the farmer will pay to the financial institution after a year. You start by getting the interest. How did we get the interest? We said 12 divided by 100 multiplied by 350,000. We got our interest. Then you say the interest plus the 350,000, because the farmer will have to pay back the interest including the money that he borrowed. The farmer will have to pay the interest including the money that he has borrowed. So you will then say 350,000 plus 42,000, you get 392,000. That is the simplest way, good people, to understand this. But then, what they do in the exam, they try to trick us with questions that may seem to be challenging. I will try to create another presentation where we will be focusing on questions based on these financial documents, whereby we will look at some calculations whereby they say the farmer borrowed this and this and this, he made this money or he sold this and this, and then they got this money. That's when we will be able to make some practice. But as for you, be able to come up with your budget. You draw your budget, you calculate the total of the income and expenditures, you come up with a profit. Balance sheet, you draw your balance sheet, asset, liabilities, total, and then you calculate the net worth. Income statement, be able to do an income statement. After an income statement, you then do what? Your net income. Cash flow statement, again, be able to answer questions based on the cash flow. You know your components of cash flow. You know how to identify the opening balance of this month and the closing balance of the other month, and do some other calculations there. When they ask you about interest, be able to calculate an interest. They ask you the money that you will pay back to the bank. You say the interest plus that money that the farmer has borrowed. So it will be very easy for you. But then when we get time to do the questions, we will do it. Let me prepare one for labor and management, because those are the two that are left now. I will share them with you within the end of 12 hours. It will be quick for me to prepare those two. Okay, good people, thank you. Make sure that you watch it more than 3 times for you to understand everything. Thank you.